Is this the week we reach peak inventory for the year? Inventory has been still on the rise. Our forecast model had projected that inventory would tick up this week, and it did. Next week will be the pivotal inflection point. That's the week when when the model assumes that inventory can't really keep climbing so late in the year. But as of this week, inventory is at its highest point of the year. I pointed out recently how dramatically buyer demand stopped in the first week of September when mortgage rates jumped from 5 to 6 and now 7%. Inventory, which had plateaued for the year in August, started rising again at that moment. So that's what we want to keep our eye on. Is this the week of peak inventory, or has home buyer demand stopped so completely that inventory rises even as we approach Thanksgiving? Each week, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos reports with your clients, your buyers and sellers, now might be the right time to step up and do so. Go to altosresearch.com and just book a free consult with our team, because everyone is worried about what's happening right now. They need you to help them see clearly. The data we cover here in these national videos is available for every zip code in the US. So join us, dive in. There's a link actually to click through to Altos Research in the description below. Click that. I'm Mike Simonsen. I'm the CEO of Altos Research. And here's what the data looks like for the week of October 17, 2022. We're going to start today with the weekly forecast of inventory growth. We're projecting this week as peak inventory for 2022. There has been no time in the last decade or more where inventory was still growing by the end of October. Each bar here is a week. When the bar is above the line, that's when inventory grew in that week. And when it's below the line, inventory shrank. Each color here is a year. In the far right end of the chart, you can see is the brown. That is how much inventory is projected to decline each week until the end of the year. The gray section in the middle is 2018. That year, mortgage rates rose from 3.9 to 4.9%, and inventory rose along with rates until mid-October. But as the holidays approach, significantly fewer homes are on the market. Even if a house doesn't sell, it often gets just withdrawn rather than just sitting around with no attention. So it's a very reliable seasonal pattern. So, that reliable seasonal pattern is what the model is based on. 2018 showed us how late in the year inventory can grow. So even though demand is way down now, it's actually hard to imagine how we'd have net more sellers as we step closer to Thanksgiving week. Of course, 2020 taught us that the reliable seasonal patterns can be broken. And you can see the light blue section here. The inventory fell almost every week during the entire year of 2020. So that's really the open question, is how completely has housing demand been shut down? So we're going to revisit this forecast each week and maybe learn how counter-seasonal this year could become. As of right now, the model projects 486,000 single-family homes on the market at the end of the year. That adjusts each week a little bit, and so somewhere around, call it 490,000 homes. So here's a local view of what I mean. This is San Francisco inventory of single-family homes available, unsold, on the market over the last 8 years. I pulled this chart out of our advanced analytics platform because the annual PIPs here are really easy to read. See the dots in mid-October each week, each October each year. You can see how reliably and dramatically inventory falls starting in November. San Francisco was different from most of the country in 2020 when remote work allowed people to move, from San Francisco to Boise and Austin, driving up inventory here and down in those parts of the country. But even in that year of massive outmigration from San Francisco, inventory fell dramatically in November. And that's why it's likely to happen again this year. That's why, if it doesn't, on the other hand, like if demand is so low from buyers that inventory grows in November, that'd be a truly unusual signal and quite bearish for home prices in 2023. So let's keep our eyes on that. So that's the context to keep in mind when looking at the annual inventory trend. This week, there are 566,000 single-family homes unsold on the market. That's up a little under 1% from last week. Inventory is 33% higher than last year at this time, but it's still 40% fewer than 2019. So you can see at the far right end of this chart, the little September inflection point where inventory started climbing again. Rates spiked in September and inventory started rising again across the country. So 566,000 single-family homes on the market now, likely about 490,000 before the end of the year, before the market resets for spring. Home prices ticked down this week, as expected. The median price for single-family homes in the U.S. is now $430,000, and then that's down almost 1% from last week. And if you've been paying attention, you'll recall that home prices will end the year closer to $400,000, and then normally they'd resume climbing in the spring. You can see where we are in the annual seasonal curve here and how as inventory falls through the end of the year, prices fall too. If rates stay close to 7% where they are now, it's hard to imagine how prices will do their new climb in the spring. You can see this dark red line curve up, and you'll see it curve up much more slowly than in previous years. And that'll allow us to see home prices for the whole of 2023 pretty early in the year. Checking in on price reductions, too, we can see that mid-October is also typically the peak there, like it is for inventory. As fewer homes are on the market in the fall, more homes are withdrawn, the percentage of those that have had price cuts starts falling dramatically, too. A few more weeks before the percentage of the market with price reductions starts declining. This will be really a function of those properties with the least interest being pulled over the holidays. One factor that bears watching this year are the iBuyers. So these are companies like Opendoor and OfferPad. They have a lot of inventory, and much of which is being listed at below what they paid for it a few months ago. And if it's sitting on the market, maybe taking price cuts. So the iBuyers have had significantly less market share than that back in 2019. And so as sellers, they may behave differently than individual homeowners do over the holidays. So for example, do they keep their properties listed over the holidays? These are new dynamics that bear watching this year, especially in local markets like the Sun Belt states that have the most market share of the iBuyers, which still isn't a ton of market share, but it's but there's some there. These local dynamics are why I encourage you to, if you need to help buyers and sellers understand what's happening in the market right now, I encourage you to go to altosresearch.com, book time with our team for a free consultation. People desperately need to know what's actually happening in the market right now, and they need you to help them make the right decisions. There's a link in the description below to visit Altos and get rolling with the data today. So that's all the data we have time for this week. More next week.